Hey, Brent, just in the recent week, one of the major banks in the United States has run into a significant fine for some money laundering issues within their organization. AML, anti-money laundering, is a function within the bank that's supposed to prevent these things, but clearly their controls weren't in control. And, from your experience, what causes those things to happen? I mean, banks are, there might be some intentional things going on, but generally speaking, people are trying to do the right things.
Right.
Is it the rules are too complex to follow, or the system's too hard to use, or what, if you could put your finger on a couple of things, what would you think it is?
That's a great question, David. And a couple of things. One is what you said, I think is correct. Most people are trying to do the right thing. There are probably multiple reasons that these breakdowns happen. What's always interesting, though, David, is we'll talk about that in just a second. What's interesting, though, is how do the breakdowns last long enough that a regulator can come in and look back over 12 months or 24 months and tell you that the breakdown's there, and thus I'm going to fine you $140 million, right? That's the interesting one. So when you think about why does the breakdown, your first question, why does the breakdown happen? There's probably a multitude of things. One could be that requirements have changed but weren't communicated. Requirements have changed, and while they maybe changed something in technology, and if you read this recent one, right, what you saw is they were still executing the KYC process. There are the CSRs, so the SAR, the suspicious activity report, that have to be filed, and they have to be filed within a certain amount of time. And they're pretty prescriptive, but they're kind of simple in nature. Those weren't being filed. So the question becomes, so we did the assessment. I assessed David Bliss coming in. We flagged the people we had to identify as suspicious activity reports, and then we didn't submit them. So who fell down, right? Who didn't understand that they had a responsibility to finish the process? The secondary, so that's kind of, I don't know. I have no idea why that happened. The question would be is, how did you go 24 months and not realize that nobody was filing the SARs? You would think that there would be a control in place, a report being generated, internal audit, second line of defense, which could be QC or something, right? That one of those things would have found that SARs are not being submitted and would have identified that. But it's a complete breakdown. And they're going to have to look at that. I mean, it's a unique situation. What it points out to us, though, is there are specific topics in banking that, if not done correctly, the penalties are very, very severe. There's no like, hey, slap on the wrist. It's a pound of flesh that they take. And it feels like, David, my experience says the bigger your name is, the bigger the pound of flesh they try and take.
Clearly. Yeah. We've seen that over the years, and right or wrong, it's to make sure that, hey, these are big issues, and certainly there's a lot of money laundering going on across the world in a variety of different channels. So it's a big deal. Do you think that it appears that there weren't any validations? I'm trying to simplify the process here of how do people do their job but don't know that their job's not complete? Because that's what you described. Are there not systems in place that make that happen? Or are they unable to start the process and it sounds like it needs to go somewhere else to get a deeper level of assessments, and then everybody's on the chain gets validated that it's been completed? That sounds like that was not something that these folks were dealing with.
Yeah, your logic and reasoning is absolutely correct. So then what you're saying isn't the hardest thing to do in the world, and yet they didn't do it. And that, David, to me, is the opportunity we have in front of us, because that's one example of a total breakdown. of completing a process, of getting a business outcome. But in every organization, those things exist. And that's what we do best. We create outcomes. We close loops and make sure the entire process is not only efficient and optimized, but it's complete.
Yep.
And so that to me is what is exciting about our opportunity at Rulesware. We don't have to be the coolest thing that no one's ever thought of, but we could be the coolest thing that makes sure people don't get $140 fines, $140 million fines, because they couldn't close the loop themselves.
Yeah, I think it's to make sure you do the mundane really, really well and complete. And sometimes it's not the thing that gets the trophy for being the most beautiful action, but it's the one that gets it done consistently and successfully every time. It avoids these massive penalties and I think people have to understand that comes right off the bottom line for the company.
Yeah.
That's money that you can just kiss off that you are planning to do any type of investment to grow the company or anything else. Oftentimes people see these massive numbers and feel like there's some kind of magic bucket that those get pulled from, but these are significant penalties. What other things are there in the world of banking today that you feel have similar oversight that may be not doing not activities like a loan process where customers need to have better insight about where their loan is, the bank processing a business loan, for example, needs to provide better clarity for its internal people, and then regulators at the end need to have confidence that they can come in and quickly look at the activity and know it's right. What other issues are banks facing like that throughout their organization that you see?
So one of the areas, David, that I think about, like in the payment space, and it's a product that Rulesware is soon to come out with. It's Rulesware Risk Resolve. Every day, I take a regional bank, David, like a Comerica or a Frost or Union, those types of organizations. They're not the mega banks. They're just kind of those banks that are out there in the United States and Canada and South America. They get thousands of fraud alerts every day. Thousands of fraud alerts relative to their payments. Who's dealing with those? Every single alert people deal with. Is this alert I have to take more action on? Is this alert I override? It's okay. If I have to take action on it, what's the next action that needs to be taken? And then to your exact question, and how do I follow that all the way through to ensure everything was completed, whether there was a suspicious activity report, I denied that there was fraud, AML, or you know what, we messed up. The algorithm's identifying false positives. That closed loop, right? And that's exactly what Rulesware Risk Resolve is going to be aimed at doing. Because in today's world, if you think about getting thousands of those, if you're Bank of America, you're getting hundreds of thousands of those a day. How do you actually manually deal with that and do it correctly? Like step one is just validating, is it real? Is this a real alert or it's a false positive? Then step two is, okay, there's 50 different scenarios of I may have to do this, I may have to do that, which is all going to be regulatory and rules driven.
Yep.
How do you design a system that automates, and you've said this to me before, automation is good to a point.
Yep.
How do we design a system that does that? Take your thousands, if not hundreds of thousands of alerts every day and decision them for you. These go into this bucket, override. These go into this bucket, take action. Take action, these go here, do this. These go here, do that.
Yeah, and so when you describe when you see these specific types of payments, what is there a category of payments that that the solution and product you're formulating targets? Can you give us a little more description on that?
I think if I understand your question right, I think what you're asking about is these are wires, ACH, like direct deposits or direct pay to P2P type payments. They happen within the bank. It's an ACH out or it's a payment out that gets triggered, and thousands of those every day there's a flag. And there's two parts of this. One is making sure that you truly identify which ones are really alerts and should be dealt with. And then how do they get dealt with in David all the way through, like through completion. Two is a customer experience. How many times are customers going to tolerate the fact that you keep hanging a payment because you're getting a fraud alert and it's not getting dealt with quick enough? It's a false positive. Or vice versa, payments go out and it shouldn't have, right? Because you didn't detect it correctly. So there's several fintech best-in-class systems that do the fraud alert, like they do the detection. But the only thing they do, David, is they send it into a queue. Hey, David, here's another one. Hey, David, here's another one.
They don't spawn the work actions that need to take place. And what we're describing is, I'm guessing, because my history tells me, regardless of industry, that these very important activities on follow-up and actions devolve into email. And that ends up being the tool of choice because it's easy to use to work through these things. Has your direct experience shown that to be the case in your during your work history?
Yeah, I mean, it can be email. They could just go to a queue and don't get addressed. They just go to the queue. Or it could be someone who's dealing with as many as they can. They're doing the best they can, but there's too many. And I can't follow up on all of these. I can't deal with all of these. I don't know how to deal with. This is a weird one. I'm not even sure what to do, and I don't know who to ask. Like, if we could start to build the intelligence into that process so that's not a human sorting these, first quickly take all the ones that should be false positives and get them moving so the customer experience is right. Second, take the ones that validate these should be addressed and get them into the right queues, and then force or push or bring transparency to the fact they're either getting work or they're not through completion. And now I have auditability. I have a better customer experience. I can drive accountability. And if my business grows from a system perspective, I can scale with it. Right now, from a human perspective, you're not keeping up as it is. If you continue to grow, it just gets worse.
All right.
Which is similar. I was just going to say, which is similar to our current client we're implementing that with right now. They have about 6,500 open cases that we told them they have till April 15th to bring down to zero.
Yeah.
The problem is they've done this twice. They've built, over a couple of years, they build it up and clean it. And then over a couple of years, they build it up. Now they're having to clean it again. The question is, what's breaking down in your process? This shouldn't be happening. You should never build
there's
backlog
certainly
up.
a lack of automation in there that causes that to grow to those areas. So one quick final question. If you were to put use whatever tools are necessary to make either solve a simple vexing problem or a complex problem within a financial institution, do you have any other thoughts on that area? Maybe it's beyond what we offer today.
I feel like, David, my experience in banking, and when we talked about, remember the first bank we talked about with the $140 million fine, I feel like what happens is quite too often you don't have people who think horizontally. You just have people who transact vertically. And so I do what I do. I don't know what happens before it gets to my queue, and I don't know what happens when it leaves my queue, but I did my part. And no one's connecting the whole thing like, hey, wait, let's talk about what the experience needs to be and what our obligation is. And let's make sure that whole end-to-end thing's working, and then we'll figure out who does what. In the real world, people say, well, just tell me what I have to do. And I do that, and then I don't know what happened to it after it left me. And now you find yourself where SARs aren't being filed. David, think about what it was. I just had to submit those. to FinCEN. Yep, I filled out the report. I told you who it was. I detected it correctly. I filled out the report. I just didn't submit them. That's what the fine is.
Well, I think it's hopefully this has been helpful for folks who get a chance to listen, and we'll pick up some other topics in the future. Lots and lots of things going on, and it's a target-rich environment to help prospects and customers improve the way they do business with their customers and members. So appreciate everybody listening in today.